Good day, Peter Quinn calling you from San Diego. Peter Matthews. We're here today with Bryan Geisbauer. Bryan is one of my Kidder partners. He's occupies space up in the Carmel Valley office, services clients all over the United States. Bryan is licensed in California and Arizona and specializes in tenant representation. Bryan joined the Kidder about 10 years ago from a competitive service provider and has found the Kidder platform to be a great resource for his clients himself. He's trusted himself as a trusted advisor to numerous industries over the years. We'll let Bryan sort of fill in the blanks here. Hey, Bryan, good morning. Welcome.
Morning, Peter. Thanks for having me. Quite an honor.
Well, it's an honor to have you here. The last few years from COVID through, I think, 2025 have been challenging. I know that we've both seen some changes in our marketplace, and we're going to talk a little bit about that today. But we're also going to talk about what we expect to see in 2026.
Oh, jumping right into the future, huh?
Jumping right into the future.
Wow, got to pull out my crystal ball.
So I've got my own opinions for sure, but how would you describe the current state of the San Diego office marketplace? And I think when you describe it, I'd like you to address certain submarkets and your opinion of what's going on.
Well, I think we're going through a major market recalibration, really. I mean, the whole work from home, the remote work and hybrid work environment has certainly changed the way people are looking at their existing leases. I mean, for the last handful of years, a lot of companies have just been kicking the can with lease renewals. I think there's still a lot of uncertainty with respect to everybody's individualized business of what that work from home is really going to be going forward. I mean, I hear a lot from clients that while the work from home kind of works, they don't feel as if they're getting the true value of their employees and productivity out of it. And while people can say, yeah, I can do accounting work from anywhere, I think there's a lot of benefit that organizations get when their people are together. And I think that's kind of the biggest recalibration we're going through is what is that really going to look like at the end of the day?
I think you're right. I'm hearing from principals at firms and guys like you and me who've been in the business for our business for a number of years that you lose the entire mentoring platform when you have new hires or people that have less experience than you do who aren't socializing, much less conducting any business together because they're just not together. I know I benefit from coming into the office every day because I've learned I don't know everything. So if
Sure.
I can ask somebody down the hall, how would you handle the situation? I think it makes me more productive. And you and I have been around the block for a couple of times.
Yeah, I reflect a lot on it from my early years in the business and how much I would learn just by sitting out in that cubicle out front some of the senior guys' offices and just being a fly on the wall, right? You hear this conversation, you hear that conversation. Maybe you're pulled into a different conference call or a meeting that you weren't expecting, but there's a lot to learn by just being there and listening. And I think in today's world where people aren't always on site, you lose some of that. And you not only do you lose that connectivity with others and the ability to learn, companies lose that loyalty aspect. Because when you're there and you build camaraderie with your colleagues, you become really more ingrained in the social fabric and culture of the organization. And without that, I think employees are less loyal. They're more apt to pick up and go somewhere else for a few dollars more. And losing employees is extremely expensive.
Yeah, totally agree. Let's jump back into some of the submarkets here in the San Diego area. What are your views of a strong market, a weak market, and a market that's just chugging along?
Well, San Diego as a whole, I think, has done a lot better than a lot of other major markets across the U.S. Our vacancy and availability numbers pre-COVID were pretty strong. We weren't overbuilt, and kind of as that market shifted after that, we were just positioned to kind of weather that storm a little bit better than some. Um, you look at San Diego and everybody always wants to talk about downtown, right? So let's just jump into the ugly first.
Right.
I mean, downtown's been a bloodbath.
Yeah.
There's as for as much positive there is downtown as far as the residential living, the restaurants, that kind of environment, that walkability of downtown. A lot of the homeless problems have really plagued downtown a lot since COVID started. And as much as they try to clean up the streets, it's just not happening fast enough. Like most of the tenants that I know downtown can't wait to get out. They're moving to other submarkets because they've just kind of had enough. And especially those in that B Street corridor where it's more commodity space, where vacancy and availability is a lot higher. I mean, in those buildings, occupancies, roughly, 70% or below versus on the other side of downtown along the Embarcadero where things are in the 80, 85% occupancy level. And it's kind of a tale of two areas in one really tight submarket.
I was just going to say there are people that have made bets on downtown over the years who have now abandoned downtown, Irvine Company.
Yeah.
There are new developers in the downtown marketplace that have made significant bets, specifically in life science. And so far, that appears to be a bad bet. What do you think of that market?
A life science market downtown?
Right.
Frankly, I never understood it. The core lab markets are certainly further north, La Jolla, UTC, Torrey Pines, even down into Sorrento. It's kind of where it's always been. I understand the mindset of trying to pull that market downtown and take a look at the redevelopment of Horton and what IQHQ is putting together. And IQHQ's got a great project and they've got one win with the Venture Institute moving down there, but there's still a long way to go. I just don't know that you're going to get the buy-in from that marketplace of the life science community to be downtown, because I'm not sure what else downtown offers other than easy access and some public transportation.
Right. Well, there's clearly a demarcation point in the downtown marketplace. I think you get east of Horton Plaza, and it's pretty rough. Homeless is a part of that problem, but candidly, the buildings are older, and they don't have the amenity set that the new buildings have. Let's jump into Mission Valley. What do you think of that market?
Yeah, Mission Valley has always been kind of a good spot to be in. I mean, it's pretty easy to get to, pretty easy access. It's been probably one of the more active submarkets in San Diego, just from a pure absorption basis over the last couple of years. But I think it's really dense, and I think it poses some traffic issues. But there's some great value real estate down there, and depending on where your employees are coming from, I think it's a great submarket.
Is there a reason to include Kearny Mesa in the discussion, which has been more of the center of the San Diego business community? Not really an office market per se, but there's some quality office projects in the Kearny Mesa market. What do you think of that market?
I think it's a great spot if you're buying location, but most of those projects aren't highly amenitized, so they're lacking that it factor to bring people back. And I think in this work from home hybrid environment where companies are wanting their people back more often, first started 2 days a week, now it's 3 days a week, and many are pushing for 4 days a week, but they're still only coming in 2.5 days a week by measurement or card swipes. And are they going to force that or not? But I think amenities will help bring people back, and also what you're doing to the space. I think people are looking for something different, and walk in, sit in my workstation 8 hours and leave. I think companies are going to have to do more from the design world to really bring that back.
Yeah, coming into the office, as you say, sitting in my cube, and then I want to take a lunch break at 11:45. Oh, I have to get in my car and drive someplace. Yeah, that's what downtown has, is that walkability. And candidly, that's what UTC has. What do you think of that market?
I love UTC. I think it's a great market. There's been a lot of great development and change over the last 7 or 8 years. A lot of that's been driven by the UTC mall there, bringing in the public transportation, the trolley system, certainly going to add some value, but it's going through some changes as well. I mean, you mentioned the Irvine Company earlier about downtown and their vacation of that market, but they've certainly been reinvesting in UTC. They've got some low-rise buildings around the plaza that are going to be redeveloped into mid-rise residential. So that's going to change the fabric of UTC a lot.
Totally agree. I think it's a great market to be in. Those of us that live in North County, sort of dread that connection between the 805 and the 5. It's like,
For
please
sure.
don't let me go south.
For
And then,
sure.
but it is a great market in which to attract employees. It's got all the amenity sets that one would want. Uh, you know,
Absolutely.
education, now housing is becoming a major development participant in that marketplace. All the big accounting law firms seem to have a presence in that marketplace.
Well,
Um,
UTC is essentially replaced downtown.
right.
I mean, all the typical businesses you would have seen downtown, kind of now in UTC, and that trend's been going on for 20 years. But it's, I think, a little bit more prevalent today because it's a little bit more noticeable.
So we've got our San Diego office in Carmel Valley. That's the market just north of UTC, north of the dreaded 805 split. And it's also been attracting its share of that downtown marketplace. What do you think of Carmel Valley, Del Mar Heights?
Well, it's hard not to like that market. Um, it's done really well historically from an occupancy perspective. The majority of the building owners there are heavily institutional. They're good operators. They invest back in their buildings regularly, and they're looking at maintaining high level tenants that pay rent and don't cause problems. There are a lot of law firms, a lot of accounting firms, a lot of other professional services, and that's a draw. They've repositioned some of the office buildings over the last couple of years into life science, which just helped that office market tremendously as they displaced, 250, 300,000 square feet of tenants. All those tenants just filled other office buildings that were at the time struggling a little bit because of the work from home and people going remote during those COVID years. But all that space was absorbed just naturally. So it's helped things along. It was, I think, an unintended consequence of some choices made, but it worked out pretty well for the marketplace as a whole.
Yeah, I mean, I'm not as embedded into the office sector as you are on a day-to-day basis. It just seems to me that if you're a life science company, that your rank choices go from Torrey Pines, UTC, Sorrento Mesa. Carlsbad has become a player on a smaller scale in life science, but Carmel Valley doesn't feel to me like life science. But you know, the tenants will tell us eventually. I just haven't seen a lot of energy from that sector in Carmel Valley, Delaware Heights market.
It's funny how the market kind of tells you what the market wants.
Right.
And if people are listening to it, things are going to work out.
So, how are local economic drivers? So, we've gone from in our careers here in San Diego, we've gone from a Navy town to a multifaceted economic environment. Um, what do you see as the drivers? Is it biotech? Is it defense? Is tech influencing office demand? Apple, Meta, Facebook, uh, everybody seems to be here. Google.
Well, it's interesting. San Diego's market has really become quite diversified over the years, right? I mean, as you kind of mentioned, it used to be a sleepy Navy town and heavy defense, but that's been changing a long time. Over the last couple of years, the leasing activity has been really, really well balanced between the technology sector, government, legal services, and professional services, way more than it ever has in the past. And I think that mix is gonna continue here in San Diego. I think the struggle of getting big corporate users to relocate to San Diego is a challenge because of our housing affordability, right? I mean, everything here is coastal. There's really no real strong non-coastal options for housing in San Diego, which I think is a detractor for big companies to relocate here. But then again, I'm not sure why any company would want to relocate to California. It's really not the most user-friendly or business-friendly state to operate in. But overall, I think as unemployment's pretty healthy in San Diego. I mean, what are we at? 4.95% last I looked. I think things are going to continue. I'm not sure how, unless we see a major recession, I'm not sure exactly how that's going to impact the office market. I mean, office decisions tend to be, at least they used to be, 5 to 10 years in length. They're shortening up a little bit, but I mean, somebody signs a lease today and there's layoffs tomorrow. That they're paying on that lease for a while, right? It's not like they can just shed that space whenever they wanted. If they could, I mean, that shadow space that's out there today would drive availability and vacancy way higher than they're alluding to on statistical reports. But I think the biggest thing for San Diego is what that regional investment looks like from VCs and private equity. We've seen a lot of pullback in the VC market over the last, couple of years. Early stage and capital and growth capitals are really hard to get into San Diego with tech and life sciences. And I think right now it's all being hindered based off of the AI boom, right? I mean, AI is kind of the big hot place to be, but most of that is heavily concentrated in the Bay Area. And so the money's going there. I mean, these companies are getting crazy valuations, but that impacts all markets, right? Not just San Diego. And when money's chasing something anywhere, it hurts other places.
So 2026, we're in that environment right now. We're all planning on what it is we're going to pursue and clients or industries that we're going to service. What should business owners be looking at in 2026 as they work with their trusted advisors like you on making decisions on how to operate for the next 5 to 10 years?
It's a loaded question, to be honest with you. I mean, I think every company is going to have a little bit different take on this based on where they are in their leasing cycle. Those companies out there that actually have that crystal ball and can pull it out and kind of see what their world looks like in the next 2 to 3 years. If they have that view, now's a great time to be talking about the marketplace because landlords are aggressive, concessions are up, more free rent, higher TI allowances, which you need in today's market because construction costs are bonkers. So if they can take a longer view at their world and have some confidence in the decisions they're making and make those changes today, landlords are more than happy to engage in conversation to restructure a lease early and get you into the right size space with the right layout. But that comes at a cost. That cost is term. So you've got to have that comfort in where your business is going if that's a decision you're going to make. And with that, I think comes, layouts that are more collaborative in nature, that are more adaptable and flexible. I think that hybrid model with more meeting rooms is going to continue to grow. And make sure you're understanding what that looks like as far as a geographical sense is, right? Take a look where your employees live. Do that analysis. Understand where your employees are driving from. Because if you've got people concentrated all over the county and you want to go be in Carlsbad and you've got people in the South Bay, it's a problem, right? It's going to be really tough to get those people back to the office if you're extending their commute.
It's funny that sort of drew my mind to the locational reality of Mission Valley and Kearney Mesa because there is a large contingent of trained quality employees
Of
that
course.
are south of Interstate 8, which is a sort of a demarcation line here in San Diego for those who are not intimately familiar with our geography. But the decision makers tend to be north of the 56, or there's a smattering, of course, in Point Loma, smattering, of course, in La Jolla, but lots of decision makers in North County. So decisions, that locational inflexibility is still going to drive some decision making, I would suspect.
Without a doubt. And on top of that, maybe not as much in San Diego, but I think in some other major markets, we're going to see a shift to a little bit more of a distributed office model. I mean, for so long, we've had this strategy of kind of pulling everybody together, taking advantage of economies of scale, right? Not having receptionists in 3 offices, only in 1 office. But I think as companies continue to struggle to get their people back, having more of a distributed workforce or distributed office situation, I think will benefit that because that commute will go down. And when people can be closer to home and closer to their families, when kids are sick or whatever, I think is going to be a selling point. Why
Right.
put 3 floors in UTC when you could put, 1 floor in Mission Valley, one in UTC, and maybe one in Carlsbad,
And technology is going to support that distributed office model.
without a doubt.
I talked to colleagues that I network with here in San Diego and really around Southern California. And if they're the typical San Diego office tenant, that typical office tenant is how large?
In San
The
Diego?
average. Yeah, the
Oh, your
average.
typical San Diego tenant is about 3,500 feet.
Right. So that 3,500 square foot space would accommodate a receptionist, a project coordinator, your service sales professionals and senior management. And more than a few folks that I've talked to have said, there's software products out there that I can bring into my company, and I can reduce and or eliminate that receptionist
Yep.
because their people are able to speak to it and to direct it, and then be directed to a solution to whatever question or need that they have. It will be definitely interesting to see how the market responds to that in 2026. But I don't know whether you agree or not. We're going to see a lot more of that in 27 through the end of the decade.
I think so. And I think one other thing we're going to start to see a lot more of is a growth in that owner user market.
Yeah, I agree. Doing a
You
deal
know,
right now.
yeah, over the last 4 or 5 years, the pricing in the owner user office market has been pretty flat. And with interest rates ticking back down a little bit, I think there's going to be a really good opportunity for business owners that want to own and control their operating expenses and do things their way for 26 and 27. If rates stay low, I think we're going to see a lot of movement in that owner user market. And you can see that through a lot of the redevelopment or conversion projects that are going on around the county right now.
Right. Yeah, we should spend some time, after this call, and certainly in the coming quarter to sort of pinpoint marketplaces where we can focus our attention. Because I think
Definitely.
there's things to be taken advantage of.
Definitely.
Brian, just fantastic having you with me today. Bryan Geisbauer is a senior vice president and shareholder of Kidder Matthews. He covers multiple Western U.S. marketplaces in the tenant representation field. He's not all, that's not all that he does, though. If you have a question regarding commercial real estate, Brian's information will be posted below at the end of this broadcast, and I encourage you to reach out to him. You can also call me. I'm Peter Quinn. I'm with Kidder Matthews here in San Diego, Senior Vice President and shareholder. And I really wish all of you a wonderful Christmas and happy holidays. Look forward to spending time with you in 2026. Thank you.